Welcome everybody to the Golden Prospects with a Copper Edge panel. My name is hosted by six rather. My name is Matthew Mickelborough and I am the president of Junior Resource Investing. Just a couple of disclaimers here before we get going, and I'll turn it over to the gents who we're all here to listen to. There's going to be a lot of blue sky conversation happening here, forward-looking statements as well, so please keep that in mind. There will be a full written disclaimer as well. Other notes to be aware of, this is being recorded, so make sure you're aware of that. And questions at the end, right? So I do always encourage people, if you've got questions that I think that, these panels, the strength of them hinge on, investor engagement, right? So if you've got questions, please feel free to enter them into the chat at any time. If it fits into the flow of the conversation, I'll do my level best to get them in at that point. Otherwise, I'll make sure that I book some time off at the end for your questions at that time. And so, yeah, like I say, please feel free to get those questions, and I'll do my best to get them over to the gents in question. Otherwise, though, the eternal question of portfolio construction plagues every investor, right? What should you allocate your portfolio to? When? How much? What are your optimum position sizes? These questions, they are essential to investing success. So here today to discuss why copper and gold are worthy of their place in people's portfolios are a trio of relevant industry executives. Joining me today are Sandeep Singh, who is here as CEO of Western Copper and Gold, David D'Onofrio, who is CEO of White Gold, and Steve Robertson, who is president of Prismo Metals. Gentlemen, thank you for your time. How are you guys today?
Doing great. Thanks, Matthew.
Great. Yeah, glad to be here.
Thank you, Matthew. Good to be with you.
I'm looking forward to this one. It really does kind of align with my own investment thesis as well. But maybe we'll just, we'll start out nice and general, give people an opportunity to understand who you gentlemen are and who you represent. So classic elevator pitch opportunity for you here, if you don't mind. I'll give each of you a couple minutes, talk through who you are, talk through your company, and why it's so compelling for investors. And, on my screen, left to right, we'll just start with Steve, if you don't mind. Steve from Prismo.
Okay, thanks. Yeah, I'm Steve Robertson. I'm an exploration geologist by background. I've been in the junior mining sector for about 6 years now, and currently the president of Prismo Metals. Prismo is a CSE listed company. We're also listed on OTC in Frankfurt. We've got 3 exploration projects in North America, 2 in Mexico. One of them is a gold project. The second one is in the Panaco district, surrounded by Vizsla Resources, and that's a bonanza grade silver prospect. We're about to start drilling there. And the flagship project is in Arizona. So it's a copper exploration play. We're 40 kilometers south of Resolution, and we think we have very similar geology and structural setting there. So we should be drilling there. We're hoping in a month, should be in Q3 for sure. And very much looking forward to doing some deep drilling on that project to see what lurks at depth. Thank you, Stephen. Over to you, Sandeep.
Sure. Thanks, Matthew. Sandeep Singh, the CEO of Western Copper and Gold. We're listed in Toronto and New York under the ticker symbol WRN. We have a globally significant, we like to say, world-class is a bit overused, but globally significant copper and gold project in the Yukon in Canada. It's a project that has undergone quite a lot of advancement in the last several years, with the resource size in the M&I category doubling. It's been brought to feasibility study that's quite current in mid-2022, received significant endorsements from some of the smarter names in the copper space, namely Rio Tinto, who owns just shy of 10%, and Mitsubishi Materials, who owns about 4%. And we're pushing it through the permitting phase as we speak, de-risking it as we go. I mentioned, for this panel, I think we have the right commodities to be on this panel. We have 11 billion pounds of copper, 21 million ounces of gold. Most of that is in the M&I category, so well drilled out, and a project that has a lot of good attributes in terms of low elevation, clean metallurgy, improving infrastructure, and that's why we're as bullish as we are. However you cut the numbers, whatever your assumptions are for commodity prices, etc., but we have a multi-billion-dollar project in terms of fundamental value, and we're trading at a fraction of that. So that's the opportunity that we're seeking to change.
Excellent. And over to you, David.
Perfect. Great to be here. White Gold Corp, we have very unique and interesting company, I believe. Our projects are in Canada's Yukon in the Klondike district. This was the epicenter of the gold rush a little over 100 years ago, where there had been over 20 million ounces of placer gold mined from the creek beds in that area. But remarkably, there has been next to no modern day exploration until about 15 years ago when our partner Sean Ryan went there to just sort of try to, see where all this gold might have come from. And it was a unique sort of territory. Maybe that's part of the reason why no one had done the work, being that the majority had not been glaciated. So there was very little outcrop. So Sean utilized some novel technologies and exploration approaches. Some he created on his own, some he leveraged from other sort of similar jurisdictions worldwide to vector into where might these mineralized systems be hiding, and then go into the drilling. And he's been phenomenally successful over that period of time. He's made several multi-million ounce discoveries. White Gold Corp owns one of them. It's called the Golden Saddle Deposit, now grown to over 2 million ounces of gold. Fabulous grades, around 2 grams per ton. He also discovered the Coffee deposit, which was acquired by Gold Corp, now part of Newmont. And what we really like about the company is we sort of have the team that we believe has cracked the code to make these discoveries. We've done a lot of work on, we have over 30 properties in the district. It is a true district scale type of portfolio, just under 1 million acres. And we believe we have, many more of these opportunities to make more significant discoveries, some of which we made, and then now they're in the earlier days of delineation. So as a junior company, we have the meat and potatoes of an existing deposit, which is growing, open in all directions. And we have a lot of this blue sky, new discovery type opportunities. So we kind of get the best of both worlds. And we're obviously operating in a great place in Canada's Yukon, with some tremendous partners. We've been able to attract Nico Eagle and Kinross to be strategic partners alongside Sean Ryan, and the Power One Group, who I'm also a part of, is also a key shareholder as well.
Excellent, thank you, gentlemen. We'll starting again generally. We'll get into maybe some more the guts of it here in a bit, but just very generally, and Sandeep, I'll start with you. But reasons to buy copper. We'll do gold next. We'll give it kind of a chance for the 1-2 punch here. But Sandeep, do you just want to? What is your number one reason to buy copper? I guess is a simple question.
Yeah, look, and we have a lot of both. We are Western Copper and Gold. We consider ourselves a copper company with a lot of gold. Depending on the day and the commodity prices you use, we could some days be Western Gold and Copper. But look, I think the thesis for copper, is fantastic. Obviously the energy transition has been driving that excitement. Some of that excitement's come off in the last little while. As it is still an economic metal. It's driven by economic factors, and we've seen a pullback in China. But I think if you look past that immediate term, I think the outlook for it is tremendous. There's still significant industrialization in the East that needs to take place. You've got a continent in India that has probably tenfold growth over, into the middle of, 2050, give or take. Which will make up for some of that pullback in China, which does have a decreasing population. You've got continued, electrification and energy transition in the West, or even globally, that will continue to kind of happen. Maybe slower than was expected by some, but that's a march that is ongoing from a critical minerals perspective. And then just normal growth beyond that. When you tack on things like the AI race, and it is a race, I think, between the East and the West, maybe the only race that the West is currently winning. You take any of those or any 1.5 of those factors, and you can't help but be positive about the demand side of the copper side, of the copper sector, And then unlike maybe the last few years where the sector did a pretty good job of meeting that from a supply perspective, new mines coming on globally, expansions globally, when you forecast out for the rest of this decade and beyond, it's very tough to see where that incremental supply is going to come to match. And that's what kind of really excites me. If there isn't a shovel in the ground somewhere now, it's really hard to kind of see where that next wave will come. It's all basically end of decade onwards, which is kind of where we fit, we hope. So that combination of continued march along the demand side, maybe slower than some people expected, and the supply crunch being really tough the next time around, especially when you think of big copper projects. They tend to be bigger, the CapEx tends to be bigger. So if you're sitting in a boardroom and you're looking at a map in terms of where can I make multiple, or in some cases, investment decisions, unfortunately that map tends to cross countries off every year. So having that, having a project, a big copper gold project, casino project in the Yukon, in Canada, I think puts us in good stead. So that's my high level view for copper at least.
No, well said. And Steve, I'll let you do a little bit of cleanup work here. Anything that, in addition to what he said, or anything you want to dig into in a bit more depth?
Yeah, I think that the real critical thing for me right now is the supply side. The demand side is very interesting for all the reasons that Sandeep said. And, there are fluctuations quarter to quarter, but when you take a look at the overall demand curve, it just continues to increase every year. But the corner that we've painted ourselves into now is the supply side. It's got no easy path out, and there just are not a lot of great deposits being found or developed. And when you do find one, it takes decades to be able to get them up on a stump. So I think that the supply crunch is coming, and that's, of course, good from a commodity price perspective for us. And I would say that all of the major copper miners that are out there are really looking to figure out what's going to fill their pipeline over the next couple of decades. There are a lot of junior companies like Prismo Metals that are being very carefully watched by the majors because they just can't find it within their own portfolio, and they have to go out and be predatory on other companies, which of course is great in our business.
No, I'm sure you all have seen the same graph that I have showing the last 5 or 10 years, the market decrease in exploration dollars and discoveries in this field. So absolutely. And David, you're representing gold, so maybe a little off base for you, but anything you want to?
Yeah, I think those are great points. And the one thing I was going to add on to is what you just mentioned, right? All metals, it is so hard, takes so much time and so much money to actually make these discoveries. So when you're in a position like a Sandeep that already has an enormous deposit like that, the odds, the cost of time of trying to replicate that again in today's dollars, it's almost unheard of. So if you can have a leg up, in that scenario, these are, where people as investors want to be looking. And your point, I think, hit it exactly on the head. Like, with the Power One Group, we've been financing exploration development for over 20 years, and we've seen the full cycle from, grassroots discovery right through to production, and know what that takes. And with that reduction in exploration spend in the last decade, that's just, multiplying this crunch that's coming. And I think, the market doesn't really know about that. Maybe they don't care about that. Maybe there's other sort of sexier things that they can invest in the near term, like AI or whatever it is. That's fine. But from a fundamental GDP economic perspective, materials are needed. At some point, this is all going to come to roost. And what's that going to lead to? In my view, it's going to lead to sort of phenomenally higher prices for a lot of these commodities because the supply is just not going to be there, right? The demand, there's projections, and they sort of ebb and flow depending on whatever the headline is for the day. But fundamentally, like Steve said, that supply is pretty well known at this point in time, right? And it's certainly, in my view, not in a position to meet the demand, even the lower sort of projected demands for a lot of these commodities, and copper is certainly one of them.
Yeah, it's certainly not copper specific. And so I'll bump it right back to you, David, if you don't mind. We'll switch gears here to gold. Reasons to buy gold. Why do you think it's such a strong investment opportunity for people right now?
I think there's maybe two questions there. One, I would say there's a reason to buy gold, and maybe what's the reason to sort of look at gold equities, or gold. The reasons to buy gold. There's a lot of macroeconomic reason why people should protection of value, right? That's something that's always been out there. It's a low risk asset theoretically. When interest rates went down, it became less interesting. But if you look at the performance of gold and what it's done in the last 5 years, it's performed, I think, as good or probably close to as good as almost any sector and market, right? So it's kind of like this quiet, sleepy thing that maybe you don't really think of. And maybe investors typically don't think like, how do I buy gold? It's difficult. What's nice is technology has really improved the access. There's certainly the ETFs are out there. There's a lot of ways through even the big Canadian banks to buy digital interest in physical gold. Makes it a lot easier. So you're not getting a bar, you're going to store it at home, you do with it, insurance, et cetera, et cetera. But what I think is really exciting at this point in time in the market is there's been this disconnect between the performance of the commodities and the performance of the equities, especially in gold, right? Gold here is around $2,500, close to all-time highs. And you're just starting to see now, or the last couple of months, where the major producers have started to re-rate. Actually, they've done quite well. If you look at our partner in Yukon, it's probably doubled in the last 6 months. And what I think is starting to happen, the market's starting to realize is, there was a lot of inflation, the price of gold went up, but now the producers are starting to see true margin expansion with this next leg up in the price of gold. So to the extent that gold continues to rise, you can expect, with the way it's typically worked historically, to have leverage in the equities. And then as that leverage sort of matures, then typically investors will look to go to the mid-tier producer and then to the explorers and developers. And there's actually an article in Barron's this weekend, which makes us maybe see that the mainstream media is starting to clue into this. The junior gold explorers have never had this disconnect in equity value versus the asset value. If you look at white gold, it's a perfect example. There's a lot of other companies in a similar boat. We have this 2 million ounce plus deposit, phenomenal grades, and one of the best places in the world. And a lot of them are sitting at close to all-time lows of equity values and all-time highs. So you would hope to think that torque in that is pretty appealing, or at least now starting to be more and more appealing as people are getting their head around to maybe investing in gold for the reasons we discussed and looking for the more torque in that. And there's a pretty infamous think tank that I won't say his name in the sector. And his perspective is now, he said, I look at these junior gold names and I see 10 to 20% downside potential, but I see 10, 20 times multiple upside potential. So hopefully that starts to resonate. And not everyone maybe likes that type of risk, but I think that's the real opportunity where we sit right now today, which is extremely exciting for a lot of us here.
No, excellent. And Sandeep, will let you go next. Just reasons, and it's a point well made by David. Gold or gold equities, important kind of thread to split there. But where do you want it? Where do you step it in terms of reasons to buy gold or gold equities?
Yeah, look, I think there's a lot. I agree with everything David said. That disconnect. If you just start back with the metal, I think it's been a slow march up. The last little move up has been maybe a bit more sudden. But if you look at gold over time, ever since it got depegged, it's just generally inflated itself. And I think it's been a good performer. It's certainly a good diversifier in people's portfolios. And it is that insurance, it's that hedge. The problem with insurance isn't sexy to everybody. It generally means that the rest of your portfolio is not going to do particularly well, and people don't tend to want it until they really need it. But I do think people have realized that in a world where global debt levels continue to rise unabated, where the U.S. dollar post the invasion of Ukraine has gotten somewhat weaponized, where you've got Eastern countries and even some Western countries saying, do I want all my exposure, all the exposure I have to the U.S. dollar, or do I want to kind of protect myself? That you've seen that play out. You've seen retail owners in the East, be it China and India, start to accumulate gold. Obviously, the central banks have been buying for a long time for the previous reasons I mentioned. And I think all of a sudden you're seeing the West wake up and say, look, maybe we need to own some as well, because it's certainly been underheld by generalist types investors. The folks in the mining space that need to own it have owned it, but that group has been shrinking. All of a sudden, as David pointed out, you're seeing articles show up on Barron's and other places. I think generalists, if they start to dabble a little bit, it has a big impact. We've seen it in the producers. That money, as David mentioned, always goes to the top, the most senior names. We haven't seen it in the development space for a long time, but eventually, a healthy market does trickle down, both in terms of investor interest, but also in terms of, corporate interest, as Steve was pointing out earlier. So positive about the metal and positive about having exposure to it in the equities.
Absolutely. And Steve, your thoughts?
Yeah, I think that gold is going to see its day again, because quite frankly, the U.S. dollar's been having gold's lunch for the last couple of decades. And, if you wanted security and safety, you went into the U.S. dollar, but that's no longer the case. I mean, the U.S. dollar is predicted by a lot to fall in the coming years. And so you need to find another safe haven for your investments. And I think that gold is once again going to become very topical for investors, and they just haven't been there for the last little while. So it's certainly a historical perspective, but it's one that is going to repeat itself. It's not a trendy investment vehicle. It's one that's going to be there for long term, and I think people like that. They certainly need security these days.
Yeah, getting a bit trendier though. I mean, when the gold bricks, the gold bars at Costco sell out as quickly as they do, I think you're seeing that there are people paying attention.
Absolutely. Well, and I think that actually is a nice little dovetail for my follow-up question here. And I don't know if I think I'll just open up to the floor and we can duke it out if we have to from there. But I think David, your point was valid, right? That the discussion of equities, whether it be devcos or explorercos, and the leveraged approach to their underlying commodity that they offer you, obviously is a big part of this. But then the actual physical commodity itself is another question. Less so for copper, though I do know guys that stack copper, which probably a fairly physically large collection. But in terms of gold itself, though, do you think? My question, maybe it's a classic gold bug question, but do you need to stack physical gold or paper things like Sprott's physical gold trust? Is that an appropriate or good enough sort of solution to that hedging or that protection that gold offers? Anybody have thoughts on that one?
Yeah, I mean, look, I could start. I mean, I think there are various ways to get your exposure to gold. I think ultimately we are talking to you about scenarios where we have ounces in the ground. So ultimate protection, those ounces don't deteriorate, and we're all, I think, of the view that they're increasing in value and going to increase in value as we de-risk them. But certainly there are other ways to kind of get your gold exposure. I think overall everyone's underheld. I tend to personally not want to kind of speculate too far out and want to have things that are backed by physical gold. There's too many instruments that are not, but yeah, certainly good ways. There's no monopoly on how you can get your exposure. I think what we're kind of collectively saying to you is there's a lot more leverage in owning the right equities, be it gold or copper. It's not a one-for-one trade, and given how depressed the development sector has been, and honestly, it's been for a decade plus, where all the money has gone into the producing side of things, all the interest has gone there for all the right reasons: size, liquidity, the ability to get in and out. But eventually, I think of that as kind of pressing on a spring, and you keep pressing on it. Eventually, it lets loose. So good to see some activity on the development space, on the M&A side, good assets getting acquired. The cupboard is bare, pretty bare on both the copper and the gold side. So, we think there's a lot more torque, a lot more leverage with, as mentioned earlier, it's limited, you never want to say no downside, but limited downside in terms of where things are trading from a value perspective. My 2 cents.
No, thank you.
I can pitch in on this one too. I think that short of Armageddon, it doesn't really matter how you invest, but in Armageddon, you're certainly going to want to be holding the physical gold. But there's something about gold, and I've got here on my desk some gold cufflinks. These are 1915 Ducat Austrian gold coin, and I'll tell you what a conversation starter. I mean, gold fever is a real thing, and people absolutely love physical gold, and I don't think that you can go wrong having physical gold. It creates a little bit more risk, certainly, but physical gold is always going to be in demand.
As you can see by the premiums certainly employed for silver and gold, right? Maybe next question, guys. Sorry, David, did anything you want to?
No, I think those guys touched on all of it, right?
Sure.
Probably everything else, we want a bit of a balance of different sort of exposure to different things, but depending maybe where you are in the cycle, like Sandeep said, sort of on the junior side, probably a lot of the listeners here is maybe that's where their interest is. That sort of has not seen the move yet, and that's maybe logically where the most upside, the next sort of leg up would be.
Mm-hmm. And this is, I don't want to get delve into the technical weeds too much, but the next question, I think there's probably value, maybe even as a launch point for other conversations. But I sent you guys a graph that I had pulled out and showing that there are times of very strong positive correlation and also times of very negative correlation of gold and copper spot price. And so like I say, don't feel beholden to answer the question specifically, but I guess the topic that I'm maybe kind of rolling around on is how do they theoretically operate at different stages of the economic cycle, copper, gold? And then, maybe more to the point of the conversation that we're having so far is, does this very significant supply exploration deficit sort of overrule traditional knowledges, at least for the time being, until that gets sorted out? And David, are you interested in maybe starting there?
Happy to start. I don't know if this is necessarily a claim to be an expert here at all, but I would presume Dr. Copper is often tied to economic growth and prospectivity. So probably in a growing cycle, you likely see more interest there, and maybe that's the decoupling from gold. Where gold, in a lower interest rate environment like we're heading into now, is when you see more kind of the interest leaning towards the gold side. Those are my sort of thoughts, not having too much to say, admittedly, kind of for that. Of any sort of confidence level that I can provide to you guys.
No, fair enough. Like I say, I know it's not meant to get too kind of technically involved here, but just thought maybe it was a cogent question. Steve or Sandeep, any thoughts on that one?
Yeah, I can provide some of my thoughts on it. I worked a lot in British Columbia where there's copper, gold porphyries, much like the one that Sandeep has got in his company. And, there was a lot of projects that just were not economic until the price of gold spiked. And then suddenly there was a realization that, hey, we've got two commodities that are extremely valuable here. And, it became very popular to have these two commodity assets. We're not in that situation with our project down in Arizona where we've got, 90+% of most of the property down there rely on their copper revenue. And I think Peter McGaugh put it well when he said, look, the easy way out of this question is just make sure that you have grades that are high enough you can sleep at every point in the cycle. And it does give you a little bit more assurance or security, I guess, when you've got dual commodity for your revenue projections. But I think grade is still king no matter where you're at in the cycle.
Yeah, it's a good point in terms of, I was going to say the same thing. I mean, you want your project to work based on conservative long-term prices, and then if you get joy from any one of your commodities along the way, that's a good thing. I do think the fact that they're oftentimes uncorrelated is a good thing. I think that's a natural hedge for us. We don't have a company that has copper projects and gold projects. We have an asset project in Casino that has both copper and gold. You mine them simultaneously. So the fact that for a long life asset, when you're making large investment decisions, you have that interplay. Personally, I think the outlook for both of them is tremendous. But there's going to be periods where the gold over contributes and periods where the copper over contributes. So I think that's a safer way to kind of make those types of investment decisions. The other interesting facet I would say is, there's the moves in the commodities themselves, but there's also movements in investors' interest levels and moods for the commodities and the companies that underpin them. And maybe that's an obvious statement because when copper runs, people get excited about copper stocks, et cetera, et cetera. But if I look back at the last several years, just say post-COVID, all the interest, every conference you went to was copper dominated. Even your senior gold companies might have a half schedule, and everyone in the copper space couldn't have lunch. Now, in the last year or so, the gold prices had a run, but I think it's interesting to point out that the interest level in copper has not subsided. Yes, the copper stocks have come off, and you'd expect that when the copper prices come off $1 a pound, but the interest level remains high, and so that's why I'm confident in the outlook for both. It stems from, yes, it's an economic metal, but that energy transition thematic is real. A lot of the other facets we talked about are real. If you're sitting there today and you ask almost any investor, would argue if you ask them for their top two metals that they want to be exposed to, they'd say gold, copper, or copper gold in that order. So I think you can't choose what you find, but I think all of us have companies that are well suited to take advantage of that.
Well, and Steve and Sandeep, I think you both make a really good point that leads me into my next question here on the two metals, right? Having a kicker metal, whether it's copper, gold with a copper kick or vice versa, can be a huge boon, right? As both of you gents sort of referenced, right? I mean, there's financing opportunities, funding opportunities, as you referenced, Sandeep, that kind of diversification, internal diversification that reduces that exposure to risk to any single commodity. But then there's also the flip side challenges in terms of flow sheets, cost of extraction, et cetera. So maybe, let's start out, and David, I'll start with you again, but do we want to just discuss what are some benefits of that, right? To highlight or dive into some polymet or gold copper specifically benefits for projects?
Yeah, it's an interesting sort of concept, right? Sometimes you think the more metals you have, the better, the more valuable the rock. But I think it's kind of a situation of diminishing returns. Maybe, one, a byproduct, two, can start to add value. As it gets past that, you can have complications in the flow sheet or coverability that make projects not economic. So, historically, that's, typically what I've seen. I'm not technical, but, copper, gold, that's been around for 100 years, maybe some silver in there, some moly, stuff like that. But it certainly can make a big difference in the economics of a project, have that type of a byproduct. Now, you never want to rely on that because of price and variability, et cetera. And like what the guy said before, like you want to be focused, I think we all are, on projects that work outside of an inflated price environment. Gold's $2,500, maybe it's $3,000, maybe it's $5,000. That would be wonderful. But I know with us, doing our internal studies, much lower prices things seem to work. So there's been a little bit of inflation, sure. But you want to be able to kind of sleep at night, not have to worry about things out of your control that may impact your the economics of your project. So my view is some polymetallic nature is often very positive, but too much can be a problem.
Too much of a good thing, eh? Fair enough. Sandeep, what are your thoughts on this one?
Yeah, look, I think that's the same. We talked about the benefits, a lot of the benefits. The risk is always metallurgy. The risk is, are you taking away from one or necessarily kind of hurting your flow sheet and your recoverability of those metals by having too much of a mix. We're fortunate in that there's nothing complicated about our flow sheet, our metallurgy. Both the copper and the gold liberate well. So we've got high recoveries with a very simple flow sheet. It just wants, our rock just wants to float, which is excellent. So if you can solve that, really, then it's real value in the rock. If it starts to take away, that's your problem. I think the other kind of element that we haven't talked about, I don't think we've talked about, is invariably, that copper exposure, if it's in the same deposit as the gold, or even on its own, it tends to result in higher or longer, mine lives. Your typical gold asset, a lot shorter mine life than your typical copper asset. That longevity is something that's important when you see the two come together. The other thing for us, which is important, is, we're a small company with a big project. We don't see ourselves today, or any version of ourselves today, as the builder of that project. We're stewards of value to de-risk it and for all of our stakeholders. But that mix is important, and that we have, I mentioned a couple of copper names that have equity ownership in us, that have expressed interest. But once you get to a certain size in the gold space, like once you become a gold senior or even intermediate above, it gets very, very troubling or very hard to continue to grow in the pure gold space, because the assets just tend to be smaller. It's tough to find a gold mine that even does 200,000 ounces a year, let alone what's needed to kind of move the needle for a senior company. And that's why you've seen essentially all those senior companies and even some of the intermediates pivot to copper, some in massive ways, some dipping their toes, but that's where you end up. Like it or not, you're going to need that exposure to grow the companies if you want to stay the size that you are. So that's another benefit of that exposure. We've got a project that, as I said, depending on the day, could be Western Copper and Gold or Western Gold and Copper. So I think in terms of our ultimate endpoint, that adds some optionality to the types of people we can deal with. The other thing, in terms of just getting the social license that is required anywhere, but in particular in Canada and the Yukon, to see one of these projects advance, having a critical minerals aspect to your project matters. And so we're fortunate that we have such a big critical minerals project in Canada. It's Canada's largest, depending on the parameters you use, the largest critical minerals project. And that's a message that works. It works with our affected First Nations, I would argue. It works with regulators and the government, and hopefully with investors as well.
No, thank you, Steve. Any thoughts on the benefits or challenges that multiple metal, dual metal polymet can provide for companies?
Yeah, two of our three projects are pretty much single commodity. We've got, a project in the heart of the Arizona copper belt, which is definitely, most of the projects down there are definitely dominated by copper revenue. And then we've got a gold project down in Mexico. But the not the Los Pavitos project, that's the gold one in Sonora State. In Sinaloa State, we've got the Palos Verdes project, which is in the Panaco district, and our highest grade intercepts there are about half value in gold and half in copper, or half gold and half in silver. I'm sorry, and so obviously we're going to be very focused on continuing to expand and pursue the gold-rich part of the system, because those end up being the highest grade. So we see it as being a very positive thing, where you've got, and we believe that it's actually one mineralized system on top of the other one. And it's just added value to what was already a great bonanza, great prospect. Now it's got this additional complication that makes it even higher value. So we see it as being very positive. It doesn't do much in terms of complicating the metallurgy as far as we can tell.
Excellent. So next question here, it's going to be around strategizing your company building itself, right? Gold, copper, commodities, prone to large price swings, right? And as we've kind of referenced, you get to that kind of 90th percentile or the 10th percentile kind of price lows that can really start to sink or swim a lot of projects. And being able to survive those downswings are key to making your money on the upswings. But given that volatility in both copper and gold, are there strategies or how do you go about sort of shielding yourself and your company and your project timelines to ensure that profitability and resilience to get through those downswings? And Sandeep, I'll ask you to go first on this one.
Yeah, it's an interesting question. I mean, I think, you have to have a vision for what you want your company to be. It's hard. You don't want to be chasing a fad or something that's trendy. These projects, I think Steve made the point earlier, they move slowly. It's slow to unlock value, get to your next catalyst. You can't exactly forecast what the world is going to look like at that specific point in time. So I think you have to have a vision for what it is you want to achieve. For us, that's provide exposure to copper and gold in a good jurisdiction. We're fortunate that the outlook looks as positive as it does. It wasn't always the case. There was a decade for us in the 2010s where copper was going from 450 to 250 pretty much in a straight line. And that was a decade of asset preservation, if you want to call it that, where there wasn't enough equity to really move the project forward. And in the last 3 or 4 years, it's been the complete reverse. So I think it's more about where do you think you can add value? What you find has a lot to do with it. We poke holes in the ground. You obviously have a bias of view as to what you're looking for, but ultimately the rocks dictate. They won't change because something's trendy. So I look at it as more, what is your company? What are you trying to be? What's the project that you have? And then you look at the outlook for that going forward. For me, I joined this company 6 months ago, and when I was thinking about what I wanted to do in the next phase of my career, it was very clearly that I wanted to be in copper. I thought that the runway, I'm talking 5, 10, 15 years plus, I don't want to work forever, but certainly in that time frame, the outlook for copper is exceptional, and copper and gold is even better for all the reasons we've talked about. And then copper and gold in Canada, I thought was best, and so that's what drove me to where we are, where I am, and that's how I kind of think about how to position yourself, if you will. It's a long-term decision. It's a long-term game.
Excellent. No, thank you for that answer. Steve, what are your thoughts? Anything to contribute to that one?
Well, you mentioned the word resilience, and I think that resilience, you have to really be thinking about two things. Number one, the political stability of the jurisdiction that you're working in. And, if you go to a place that's tends to be dangerous, then you're going to potentially be in a situation where the political winds might shift and harm your ability to move the project forward. Whereas if you're in a good, stable jurisdiction with political stability, you're going to be able to weather the cycles and be able to move your way forward. The second component that we really need to look at is grade. And you got to start in the right address. So you want to be in a place where you're going to be able to find the type of deposit that is going to be resilient in the long run. And I don't think that you want to be searching for deposits where the grades are known to be low and and small. You want to be in a place like the Arizona Copper Belt where you've got large deposits that are known to be long-lived assets, right?
No, well said. And Dave, any additional thoughts there?
Yeah, I think, just to sort of add on to what Steve was saying, when you're looking at companies or when you're in this business, you want to have prizes that are big enough with enough cushion that can manage the cyclicality, which I think the only one thing we can predict is that there will be some sort of cyclicality. We don't know how long or how intense. And you want to ensure that you're, it's not like sort of so borderline where you can kind of come in and out of favor and understand what your products are and what your long-term forecast might be. And grade is, again, coming back to grade here, hugely important. That's sort of what I love so much about our core deposit flagship, that the grade's phenomenal. And other opportunities, when you have a huge district like we do, it opens the door to other metals, right? That, and especially we've seen in the last 5 years, a lot of these critical metals have sort of come out of nowhere, a lot of geopolitical reasons with tariffs and export restrictions, and that have brought things into the forecast. So if that comes, you don't have to want to rely on that, but that can sort of be really important. I know from our perspective, with our, we have, I think, one of the largest soil geochemical databases on the planet, just from the work that Sean Ryan and his team have been doing for the last 10 plus years. And we have gone back through that now, and there are metal occurrences that nobody cared about 5 or 7 years ago. But now we're like, these are highly interesting. Is there mine there? Should we be drilling it? Possibly. It might make sense, right? Like, we're a gold company first. But another, prime example is we have a couple of projects, we're just neighboring Sandeep on part of our portfolio. And these have, big copper gold signatures similar to, what he has. So you want to be in the right place. They obviously have their behemoth casino project, and the best place to find new deposits in your existing deposits. So we see these copper anomalies, they're very close by, and hey, that's like something that's very interesting now too, right? So these have come into, we've only been a gold company folks, we still are main, but now this is of interest for a lot of reasons. We're not chasing a headline because copper's coming to gold. Copper's there, it's for real, it's in the right area, it's in the right rocks, you have a case study, and I think that is a wise investment decision. So these are all factors you want to take into consideration when you're looking at projects.
No, well said. I mean, even just as a private investor, you look at things with size of the potential to get to a certain size as well, that all the requisite risks that come along with investing in this space. If you don't have
enough sort of cushion, like right now, most of these gold projects out there, like we talked about earlier, they're very depressed. They're trading what, $20, $30 an ounce in the ground versus historic norms, maybe double or triple that. But before a gold price was 10, 100 times that, right? Like $2,500 gold here.
Yeah, exactly. Right. Size. It does matter. It is a shield. We will transition to have some company specific questions here, and I see that there's some good questions coming in. I'll just encourage the audience here, right, last call, so to speak, for questions. Maybe there's some that could fit in here, but I'll hold off to the end. I'll ask them all at once. So maybe we will transition to our last category here, which is just like I say, a few questions for these guys. They're company specific. And Dave, I'll let you lead this one off. With the recent expansion of the gold and soil anomaly at the QB property, how do you plan to incorporate copper exploration or extraction into your gold-focused projects? And then I guess, follow up or tangent from there is, what potential do you see for a dual resource extraction in your current or future operations?
Yeah, and so maybe I jumped the gun on that question with what I just said. But so on that particular property you just mentioned, just for some context, we have a new gold anomaly that was just discovered in the last year or so. And what's really exciting about that is it's quite near our flagship deposit. So like I said, best place to find a deposit is near an existing deposit. It's on the same trend. And having done more and more work, we see what led to the success. And we really do feel like we've cracked the code for this district of the Yukon. And we're very perspective about what that could lead to. And we're now starting to drill it. But that, by the nature of what we saw in soil geochemistry, it is a gold target. Now, could there be? Now, it's multi-elemental. When you're looking for pathfinders, some of those are not necessarily economic metals, but that helps tell you where the gold is, and that's looking at gold. So the idea of how are we going to look for copper in that particular project, that's not maybe as relevant. But my point was before, we do have an opportunity. We're fortunate with this very minerally robust area of Canada that there are a lot of other economic elements in the area. We know there's great copper deposits. Obviously, like I mentioned, Sandeep's is a prime example of that. We have properties that are very nearby. So it's not so much within the same ore body looking for multi-elements, but within our portfolio, we're looking for multi-elements. So, back to what I already said, I love our company because we have the defined resources. That's growing. That's, the meat and potatoes. We have the sexy blue sky exploration. And something that's come more into the fold in the last couple of years is the opportunity to make discoveries in other elements like copper, zinc, molybdenum potentially, etc. We haven't done as much work on those, but for sure, the copper gold opportunity on those porphyry-looking targets is something that's very, very interesting to us as well.
Excellent. And Sandeep, I'll hand it over to you here. With your question being, you've got a big project, big NPV, big capital requirements. How do you go about making that happen and actually executing that into fulfillment as a smaller company?
Yeah, look, we do get that question from time to time. I think a couple of things I would say is, what I tend to focus people on is the economics. So forget us for a moment. Are the economics of the project meaningful? And I think any way you slice it, they are. This is as I said, a globally significant project. The endorsements that we've received from the folks I mentioned, I think underpin that or emphasize that. So the project itself, I think, is absolutely buildable. All the qualitative aspects, as I mentioned earlier, the elevation, the clean metallurgy, it's close. It just works from a lot of the low strip ratio. There's a lot going for it. So that's the first question. Whether we, on a standalone basis, can or should build it and operate it. Obviously, you look at a $300 million Western Copper and gold and you scoff, and that's fair. We don't make any bones about that today. But we do think our standalone plan is real as well. We don't have a for sale sign on the company. Our job is to show that we can move this project through assessment and then permitting, that we can build a social license to build this mine in the Yukon, and that it can be done for the benefit of everyone. And we legitimately do believe that. We think, or we wouldn't be pushing it forward. This is a project that can, as a mine, start to change the legacy of the Yukon from a mining perspective. It's generational. It can do a lot of good for the territory, the country, and for that energy transition. So that's in terms of the economics. So back to your specific question and the reasons why we're pushing. David mentioned you can spend all your time, or I'm paraphrasing, but he said something, quick, to me, you can spend all your time working on something small, or you can then spend all your time working on something big and important, and we've chosen the latter. So our job, though, more specifically, as I said, is to de-risk it. We're funded to do that. We've got a very strong balance sheet, which is another way you protect investors, back to your previous comment. And we believe that as we show people that there is a pathway to permitting here, and that there is support for it in the Yukon, that we can go claw that considerable value, that fundamental value that we're not getting credit for today. So that's our focus. How far down that track do we need to take it before we start getting credit for it? I don't know. We'll find out. But our eyes are kind of first set on the environmental assessment phase that we're in now, and I think that's a major de-risking element for us. So that's our job. I would say to you, when I get the question, I would say, I think the risk reward for building mines, unfortunately, we've seen it time and time again, is skewed. So you need the right people to build mines. You need them to have the right balance sheet. You need them to have the right technical capability. to buffer the risks that are involved. And this is a project that, again, has already solicited interest for some of those types of groups and others as well. So that's our objective, is to de-risk it, show the true value of it, and get that value for our shareholders and our stakeholders along the way.
Excellent, thank you. And then Steve, your question, Prismo has recently acquired historical data for your Hot Breccia project. I'm going to guess that's provided you some insights into your geological model. I guess, can you just touch on that? How has that informed your exploration strategy? How has that informed or influenced your understanding of what's going on subsurface? And how does that maybe inform your plans for drilling as well?
Yeah, well, we were talking earlier about the copper market and how the discovery rate for copper deposits has dropped down to almost zero. And the reason for that is all those big, fat, juicy porphyries sticking out on surface have largely been found. And so the next generation of discoveries, we think, is going to be ones like Resolution. Resolution, the top of the deposit is 1.2 kilometers below surface, but it's an absolute giant. It's 1.6 billion tons of 1.6% copper. So very worthwhile target, but difficult to find. And so you have to think of this as a three-dimensional jigsaw puzzle where you have to use every piece of information that you can garner to be able to inform your model so that you can explore effectively. These deep drill holes are not cheap. And so we were actually able to go out and find a historic database that contained information that we weren't privy to previously. And that included one of the drill holes from a 1970s drill program in the area that had all the assays with it and the detailed geological description. And that's absolutely invaluable to us. And the alteration minerals that we see in the core has been destroyed. So we can't go back and look at the core. But we've got this wonderful drill log now that we can do a lot with. And we've also got interpretation from the geologist who was he did his master's thesis in the area and then logged the core as well. And so his interpretation of the model in the area, it's helped us realize that the copper distribution on surface is a lot greater than we previously realized. And so we incorporate that into our model. One of the things we're doing is using an AI company in California to reinterpret our geophysical results from 2023. And before we ran that on the computer, which is happening right now, by the way, their computer program is actually running as we speak. And we've updated the model that was an input into that process with that recently found database. So it's really critical to use every piece of information that we can. And we feel very privileged that we were able to find that database.
Yeah, it's absolutely helpful. We are down to officially investor questions here. Thank you, gentlemen, for your time. Just a few left here, and I'll encourage people to get them in if you can. I think we probably have a full suite as is. I'll just run through them chronologically here, and they are open floored when they can be. Some are very company specific. This one, though, it's referenced to Steve, but I'll let Steve lead it off. But obviously, Dave and Sandeep, feel free to chime in afterwards. Robert's asking you, Steve, if you have a pair of Bitcoin cufflinks as well. Point being is, how do we attract those risk-reward investors back to commodity exploration when right now kind of cryptocurrency is eating our collective lunch a bit in that regard?
Yeah, that's very true. You'll recall 4 years ago, the marijuana companies were having our lunch because the venture capital investments were going into marijuana companies. Not too much of that going on anymore. They've come back to mining. Cryptocurrency is having our lunch a little bit these days, but I'm emboldened by hearing Warren Buffett say that eventually Bitcoin will realize its true value, which is zero. And it may or may not be. I'm not an expert in that sort of thing, so I don't know if it's going to be a long-term investment vehicle or not. But what I do know is mining will always be here to stay because we need mining. We need the copper, gold, silver going to come out of the mines. And scarcity that results from a lack of venture capital going into that sector eventually solves the problem. Your commodity prices go up and it drives the investment. So we'll be here for the long term. And I have a feeling that my gold cufflinks will outlast any Bitcoin cufflinks.
Sandeep or Dave, I guess I open floor on this one. Any thoughts?
Sure. Look, I echo that. I will say though that it shows that excitement for Bitcoin that ebbs and flows, obviously. It shows that people are looking for alternatives to holding kind of fiat currencies. I think it speaks to the narrative. Some have chosen Bitcoin to do that. Obviously, they've done a good job speaking to kind of that millennial and whatever comes after millennial audience. But we need to do a better job as miners to kind of make ourselves more relevant to that space as well. So I think there's something we can learn from that in terms of how do we just get our message out there, because just the traditional channels maybe aren't enough anymore. So we all have to kind of get better and evolve. I do think ultimately in the fullness of time, Steve's right, but you want to be right every day, not only in the end. So yeah, we'll try to kind of go and capture that, but it does swing. I mean, it's back to that analogy of the spring I mentioned. There's only so long you can push on it, but I do think it's a good thing that people are open to looking for those alternatives, and hopefully we as a sector can provide them with a good one.
Excellent.
Yeah, I think that's a great point. There's a lot of new sort of products in the market that could take be considered competition. So you need to be mindful of that. That's sort of our job as CEOs and IR teams to ensure that we understand what's going on, where the audience is going, what's made those other sectors more appealing. I think like a lot of big part of what Steve said. There's been other products that have taken up the oxygen in the room, but these things are sort of pendulums. A lot of them sort of came and went very quickly, and there's a lot of destruction out of that. But this is something fundamental. And then I think it's also important to just make sure we're addressing the narrative, right? Like for whatever reason, sometimes mining gets painted as a dirty industry. But is that accurate? Maybe there's been issues in the past. Maybe there's hopefully people have learned from that and things are being done better, which is fundamentally important. I think all of us here promote proper social license and doing things the right way for the right reasons. But people also need to remember, if you have the goals of decarbonization and less pollution in the world, mining is a part of that solution, right? Mining is not the problem to that. So doing it responsibly is going to help facilitate and accelerate these other goals, which are core to a lot of people, and a lot of people which may not understand that the correlation to each other. And so.
Excellent. There's time for one more question here, so I apologize for a couple of people that won't have time to get theirs in. Please feel free to reach out to myself, these individuals. I know that a couple of IR guys have put their email addresses up, so please follow through with the companies at your will, as you will. But one from Tom here I thought was kind of an interesting one. We'll end on this. Is just a question around the view of metal equivalent reporting. He just said that he had a major quote, gold property to him and copper equivalent, and he's just wondering, when does it make sense, when doesn't it make sense, I think is the thrust of it. And Dave, I'll let you lead off there.
I think it's fine, right? Like, it makes it, people, as long as you have the detail behind it available for people to sort of drill down further into, it makes sense. Power One, we're involved with a company in Colombia, Collective Mining. They have a phenomenal discovery, and it's primarily gold. There's a lot of copper, but if you break it up, it's hard to understand. So, they announce it in gold equivalent, but they do, show all the different, components that go into there, and there are resources out there that can help you break it down. We can make that available. You want to make it digestible for investors, but able to have available more information as you want. And I think people over time, for that case example, it's they've realized this is an enormous resource, and it's got these couple of important multi-elements and not too many, and it's worked out for them well. You don't want to be deceptive, but I think it's just for ease of interpretation.
I think that's pretty reasonable. Just provided that they provide all necessary details. Fair enough. Sandeep?
Yeah, same. I think the devil's in the details there. I mean, it's a fair way to distill things and make it easier to understand. At the end of the day, all these grams per ton or percentages, they turn into dollars, or they should turn into dollars. That's how you're trying to understand what the value of the rock is versus essentially what the cutoff grade might be. So I think it's fair, but the one thing one add-on I would add is all these different metals may have different recoveries, as we talked about earlier. So, that's one thing you can get lost in, is if you're just taking, just doing pure equivalence, and you don't keep an eye on, well, is that is that portion of the equivalence recoverable or not? You also don't want to take, you want to do your equivalent, obviously, I forget the exact question, but you want to do your equivalence in the dominant metal as opposed to turning, a lithium project into a copper equivalent project back and forth just because it's a sexy term.
Yeah, I think that highlights some of the risks there pretty effectively for sure, Sandeep. Steve, final thoughts to you here as we kind of inch right up to the right up to the end of the hour.
Yeah, I'm not going to give you a long answer. I think that David and Sandeep did a great job of covering the subject. I'll just reinforce what David was saying, that transparency is critical so that people can actually see what is going into the calculation for the equivalency and making sure that the metallurgy backs it up.
No, excellent. Well, we are on the hour here, gents. So I thank you to the audience, everyone who tuned in. I apologize if I didn't get to your questions. Otherwise, Steve, Sandeep, and David, thank you very much. 3 strong companies. Thank you for your time, guys, and good luck with the rest of your day.
Perfect.
Yeah. Thank you, Matthew.
Thanks so much.
Cheers.
Thanks very much.